Welcome, ladies and gentlemen. This is the concept that you need to master for employee benefits. So, main thing with employee benefits, remember, I've already discussed in the previous session that for any standard that we do, there's 5 things that we need to look at. So we will need to look at recognition, measurement, classification, recognition, measurement, presentation, and disclosure. So make sure that you go through that checklist to see whether you have covered all those areas. So let's jump straight into employee benefits. So I'm stopping my video, sharing my screen, making sure you understand what is expected from employee benefit side. So if we go through employee benefits, you need to see it can be asked in section A or B of the questions. We need to see for employee benefits, we're going to talk about short-term benefits, and then post-employee benefits, we're going to talk about my defined contribution plan and my defined benefit plan. And you also need to be able to criticize IS 19 for developments. So we're not going to look at other long-term benefits or termination benefits. We're just going to look at short-term and post-employee benefits because that's what's examinable. The short-term benefits, you need to see that's things like salaries or wages, leave, non-monetary benefits that we get, and make sure that you see here that there's a short-term part for leave or accumulated leave, so leave accrual that we need to account, or a provision for leave pay. So we need to see that we're going to talk about when do I recognize or account for a leave accrual or a provision for leave, and when does it accumulate, when doesn't it accumulate, things like that. So we're also going to go through the profit share of bonus plans. When do we recognize that? So make sure you understand it. And then I think we need to be able to distinguish clearly between a defined contribution plan and a defined benefit plan. The contribution plan is where I contribute and my employer contributes to an external party, and we need to be able to recognize that and say, what's the cost, what's the bank, or how does it grow at the end of the day, because or what is the part that has been paid. So that's the only part that the entity needs to recognize, because they've recognized the expense, and then it's either the expense payable or it goes through bank. But when we move to a defined benefit plan, this is where my employer is now running a plan on my behalf. So we need to see that they have some post-employee benefits where it now consists out of everything that was contributed, but there's also a defined benefit asset that is growing and the liability that's growing, and we have actuarial gains and losses that we need to be able to recognize. We need to see that this obligation, we have a plan obligation where we need to now see what is it, what we need to be able to pay, and we need to see that we also need to be able to account for current service costs. So main thing you need to see is when we look at it, there will be a current service cost and it will increase, and we need to be able to account for the increase in that part as it is that's continued at the interest rate. So we need to see that we need to be able to account for the compounded part as well. In my plan, my plan obligation needs to be remeasured every year. So we will need to see what's that plan as well. So the plan will grow, and as the plan grows, there's a plan asset and past service cost that we need to recognize. So there's a lot of things that goes into this defined benefit plan, and when we pay certain things and we settle amounts, we need to be able to recognize that as well. If we go through this whole part, we need to see in our defined plan that we have an opening part of a liability, and we go to the closing part of the liability, and in there's current service costs and actuarial gains and losses and interest that we need to recognize. The same with the asset, and we need to be able to account for the both of them, seeing what's the total that needs to be recognized. We also need to, for employee benefits, from a shareholder's perspective, see that we need to be able to discuss and see the risks involved with this defined benefit plan, and how the entity can manage risk and potential effects of future cash flows associated with this. So make sure that you think about the shareholder's perspective specifically for the defined benefit plan, and then they tell you that there's some small things that we can keep in mind. So they give us information about that, but also the link with ethical parts for my financial reporting we need to see, because there's clearly the dilemmas linked to the part for my defined contribution plan, because my defined benefit plan, because there I can create some legal obligations that is involved with the growth of that obligation that I need to pay for them once the people retire. and how does the plan asset grow. And there's a lot of ethical issues revolving my defined benefit plan. So make sure that you go and work through that part and that you understand it. Main thing for me that I want you to be able to understand from the start, and I'm just going to share my screen there again, is that we need to see that it is split into two crucial important parts. And I need to see that it's the short-term benefits and then my post-employee benefits, where we have a defined benefit plan and a defined contribution plan. And the defined benefit plan is the one where there's a lot of ethical issues and stakeholders' perspectives that we need to discuss and think about it. And as we go through the study unit, we will get to discussing it, but make sure that you understand that there's short-term benefits and post-employee benefits, and I need to be able to account for both of them. Have a lovely day, keep well, and cheers.